Afternoon, my name is Tim Clark. I'm the CEO of Fury Gold Mines. We are a high-grade exploration company in Canada with multiple assets across the country. My sort of shtick and sort of high view picture of the company is that we're one of the top companies in the junior space. We've got good financing and great assets, and we'd love to entertain some questions about the company as we see the gold market moving these days, and we were very bullish on the industry.
Your wishes are command. There will be lots of questions. It's all good. Right, so we are here in Beaver Creek.
Right.
Lots of investors are saying the mood seems good, seems better than last year.
Yeah.
How are you feeling?
We had a great last year, to be honest. So I've been running the company about 3 years now, almost exactly. The first year we came here, no one really knew us. And last year, we had a lot more recognition with particularly the producing companies, not as much with investors. And that's what this conference for us really is about. And it's been better this year. So our schedule's full. Mm-hmm. There wasn't a minute the last 2 days, and today's pretty full too. I love it because it's a lot more connectivity from a bigger perspective. When you're running a smaller company, you don't always have a chance to hear from your investors, and it's been great, So we've learned a lot, and we've got some good takeaways.
Good. Now, we have not met or spoken before, and therefore most of our audience may not have heard the story. So we're going to go through it today. Right. Not in a lot of detail because time
is tight.
Tight, right? Yeah. For the reasons you said. Let's start with you. What's your background?
So I spent 25 years in capital markets. I worked for multiple of big bank institutions, ranging from, I started out at Deutsche Bank, then it was Merrill Lynch, National Bank, Barclays. In the last 7 or 8 years, I was with Bank of Montreal. Mm-hmm. Originally, I got into the industry, was coming out of grad school, and it was tech and healthcare. And it was totally different. And I was working in New York, and then I moved back to Boston and sat on the desk at Merrill Lynch. And Merrill was one of the prominent institutions on the sell side, and they had a wide variety of desks, and they needed the guy on the Canadian desk. So I hopped in, and that's when the whole commodity market took off with China, and I never left. And because I was in the Boston area, I covered a lot of the big institutions in the country. And they happen to have a lot of natural resources in terms of analysts and investment. One of the companies had one of the largest hedge funds in natural resources in the world. And that was drawing a lot of the top, producing mining companies, and particularly the gold companies. We had good relationships. So I got to meet all these guys. And about 4 years ago, during COVID, I left. And I knew I wanted to get into the corporate side, and I had started out with another company, $1 billion company, and it was going into the battery business. But I was offered the CEO job 3 years ago at Fury, and at the time, gold was around $1,600, and I had done this a long time, and I had a good feel for it, and I was convinced that the gold was going to take off, and I was right. I've been sort of wrong on the flows of money, but the hardest part about getting into these companies is finding a good junior with good people, and I got lucky.
Well, timing is everything, right? And we're in a good moment in terms of gold price, right? For sure. I'm kind of interested in just, because I want to understand the man. Okay, I invest in the man first and then the project second. So you've come from a sort of institutional background. The junior space is
totally different.
Totally different, right? Different. What are the kind of attitude? What have you learned over that intervening period? So, and how does that affect your planning?
So, I have a very more conservative view coming from the East Coast, big institution kind of attitude. I really feel like that the junior space hasn't done themselves a lot of favors by being too over promotional. And I've learned from working with these top institutional investors, you got to provide quality, you got to provide real assets. And I also lucked out by sitting with a lot of the top CEOs in the industry. And I won't go into names in an interview, but I learned a lot. And I followed their philosophy. And so when I came in here, it was to be a lot more transparent with investors, number one. And number two, you got to surround yourself with good people. I think that the number one thing when investing in juniors, from my experience sitting on a desk doing this for 20 years, it's all about management. It's all about confidence in their ability. And you have to have a group too. I see a lot of these, geology guys running companies. And the problem with the juniors is the biggest job of the CEO is actually raising money to finance a lot of this. And if you don't have the connectivity to do it, it's harder than it looks. And generally speaking, I think the best combination is when you have a really great geologist running your program and your projects and a really good capital markets person be a team. Yeah. And then the capital markets person is also out there doing deals. And there's three ways to make money with this. You either have a discovery, gold or the commodity rips up and flows come in, or you do deals. And we've been active on all of them.
Okay. And I want to come back to some of those points in a second, right. but just kind of sticking with the structure of the company for a second. Management, you've talked about yourself, and we'll talk about your team in a second. The kind of corporate structure in terms of like share register, how have you put the company together to give it the best chance of success?
So the first thing I did before I took the job was I called two of the biggest relationships I had. One was one of the tops, if not the top institution in the United States and from the mutual fund side. And the other was one of the top CEOs or chairmen in the industry. And I asked them, I said, what do you guys think? And I said, should I take this job or not? And I'd worked for them for over 20 years. And they were all like, absolutely, we like this idea. You should take a shot at it. And I said, look, the company is not in a good financial position, but I think I have a pathway. Mm-hmm. I think I see where we can do this, where we can sell an asset. And if I can do that, to shore that up, would you guys come in and back me up? And that's exactly what happened. So the moment I started, and you do this, you ask permission by your investors before you go to do something, not after, right? And I had done a lot of work for them for a lot of years. And when we did the deal, they came in at market, no fees, no brokers. A lot of people were surprised. And they asked me, one person asked me, how long did it take you to get that deal done? And I'm like, 20 years. This is a 20-year relationship. And that's how I look at this company. I think that the junior market, a lot of people think of it as a trade or a flip, not only just from a management point of view, but from an investor point of view. And I just didn't see it that way. I like the fact there were multiple assets, and I can build on those assets, clean them up, make them better, and I can find places for them. We can either, if we get bid out and someone buys us, great. If we sell an asset for over the value that we created in there, great. We could take the money and go somewhere else. So, it's interesting. I got my stepfather into the company, put a lot of money.
Dangerous.
Yeah, it's dangerous. Like it got to the point where he took a big position, and I was a little nervous, like about showing up for Christmas. The thing wasn't working right? And I was like, look, you can't buy anymore. He's like, look, Tim, you don't understand. He's like, I don't typically buy the junior market, but he goes, what I like is gold. I like gold right now, and I don't buy companies for a trade. I buy companies that they're undervalued and they have an optionality to grow. And I know what you're doing. I hear what you're doing. And you're not only in a position to take advantage of a gold run, but you're building something. You're growing this company. And I think that's come into the culture of how we work with my people, the people that work here. And we attract good people to stay with the company because they see a home for themselves. And, we have people who have had some health issues. We support them. We don't get rid of them. We have people who've left the company, and we tell them we want them to come back. And I think that creates a lot of loyalty, and it's hard to find good people. And when we talk about things like that, and this is when I used to go into these big meetings with these big companies, it's not the numbers. When questions get asked by institutional portfolio managers, it's not so much the answer, it's the process in which the CEO gets to solve the problem they're doing, because they can't be there for every problem. But if you can understand how that person works and what their goals are, you can gain a confidence and predict how this company is going to grow or not grow. And it's the subtle things that really tell a lot about the company. And I tell little stories about, like, coming in when we showed up, we got rid of our offices, no more business class seats. We don't give out options unless you're actually providing valuable advice. And even when I got here, the business cards were super expensive. They were big and nice and thick, and I was like, wow, I've never had anything like this. But they were like $800 a box, and so we got rid of them. And then we decided to go from a cheaper box to actually using those QRC codes, so we didn't even have to buy a box, right? It sounds silly, but and someone asked me, like, why do you pay so much attention to it? And the truth is, when you do the little things right, it extends itself. You do the big things right. And I think we've been very strategically always thinking about things and developing new ideas, because the market's pivoting week to week. Assets come up where you have failures or successes and you need to move. You have new people coming in to maybe want to do a deal, and you got to be, Johnny on the spot. And so those are the things that we really concentrate on, and everything else will follow. I'm not so worried about my share price. It's been down over the last 3 years because I feel very confident that we've taken these assets and done a lot with them. For example, this year, we bought Newmont's joint venture out, a super strategic position next to the Éléonore mine that's being sold. We took 3 years with drilling. We added 40% to the resource. We just had a new greenfield discovery announced on Monday. Our share price has been flat. And a lot of people get discouraged, but it's nothing I can do about it. But when you show up to your job, you just keep focused on what your job is that day, and you move through the good times and the bad, the ups and the downs. And at the end of the day, you should get paid for it. And that's how I approach it.
Culture, attitude, and commerciality imbued in the team. Very good. Let's get on to the rest of the portfolio.
Sure.
Okay, you touched on one of them there, but before we kind of get into the projects individually, what's the plan? What's the big idea?
Yeah. So it's one of the questions we get a lot, because as a junior company, most of them are single asset, single resource. We actually have 3 assets. They're all desirable and good, I think. And then we also own a big piece of a company called Dolly Varden. So we own 18% of their stock because we originally sold that piece off to finance the company. And it was a bit of a trust factor. I really like the team there.
They're doing a great job.
They're doing a great job.
Yeah.
Sean Kunkun is awesome, and he's a great partner in crime. I'm on the board. And when you have good people, like, my job as CEO is not to micromanage. It's to find talent and give them responsibility. So we gave them that. And they put it together, and now they've really created some wealth there. And that's kind of what we're trying to do with each piece of the property. So I would say the most interesting one right now is the joint venture that most people are talking about, particularly in the brokers, because Newmont's selling a bunch of their assets in Canada, and the Éléonore mine, which we're next to, is one of them. It's the 3rd largest producing mine in Canada, and we just acquired their half of the joint venture this spring. And we think there's a lot of potential for discovery. So that's what we're focusing on that.
Talk to me about that deal structure, because obviously you're a company of a certain size.
Yeah.
Negotiating with a company like that.
Yeah,
but
it's
an
different.
asset,
It's really different,
is, right now, so you're up there. So what did that look like?
Well, originally that joint venture was managed by 3 companies, Azimuth, Fury, and Newmont. We were actually the ones who were driving the bus. We had the biggest percentage of there. As we consolidated the property, we kind of felt like that Newmont wasn't vested in that area, and that it might eventually come our way. But we really liked what we saw, and we were happy to lean into it. And I feel like this is a bull market. I'm a buyer of assets, not a seller. But when people kick things out, it's an opportunity. When you sit down as a junior with a bulge bracket company, it takes a long time. It's not an easy discussion because they have a lot of checks and balances they got to follow. So it's interesting because I used to be in all those meetings with their CEO in all my clients, and now I'm on the flip side at a smaller boutique company. But what I liked about the relationship with Newmont is it was a very partnership. The guys on the ground up there in Canada are awesome. They've kept a 6%. Yep, just don't sneeze. They've kept a 6% position in the company, and I think part of the skill set that I bring to the table is, as a junior company, if you don't get along with your majors, I don't know what you're doing, because that's your end exit strategy for a lot of your assets. The goal here is to bring these assets forward. So we sat down with one major that invested in us, and they asked us, for example, where do you see yourself in 3 to 5 years? And it was kind of a loaded question. They wanted to know if we wanted where we were going and how they were going to invest, because a lot of the companies is, it's like in a job interview, where do you see yourself in 5 years? Well, I want to own my own company. Well, I'm not going to hire you. Yeah. And so I flipped it back and said, well, what do you want? What do you need? And as a salesperson, you'd go to the portfolio manager and ask them what stocks they want to look at, not what you have in the bucket that you have to sell. And I think that a lot of the juniors have been going out there and basically waving a flag in the middle of nowhere. I'd rather go ask the major, what do you want to drill? Where do you want to be expanding? Let us go and help you. And I said, I want to be the best junior exploration company out there. And they were like, that's exactly what we wanted to hear. And the difference is, when they gave us some money, they said, we don't expect you to go out and find the next biggest discovery, because that doesn't happen often, but we expect you to spend that money wisely. And that's a big distinction, because a lot of people feel that they're entitled to take that money and do whatever they want. I got my 2 best relationships in Boston and Canada in this company. I got my family money in here. I got my own money in here. It's all about putting money in the ground. And some of the things we do spend money on, we discuss at length, and we revisit it, like being listed in the New York Stock Exchange. Very few juniors are listed in the New York Stock Exchange, but it's a huge advantage. If the money flows come in, 2/3, if not 3/4 of the new investors are in the U.S. 2/3 of our retail is in the U.S., but it's expensive to be listed. So I think it's worth it. And because we have the money from the Dolly Varden, we've never been short of cash to be able to support those good things.
Look like?
Well, our Dolly Varden position is worth around $55 or $60 million. We've got
over what period?
No, we own the equity.
So you're talking about the
equity.
So
yeah,
semi-liquid.
Yeah, so we've liquidated a few chips here and there as Dolly Varden's going up in price.
Yeah,
we've taken a little off the table.
In terms of the rest of that, is there another part to that deal in terms of taking some cash flows from that, or is it purely shares?
Well, we own equity in the company, and we've monetized some of it over the last couple of years. For example, the joint venture this spring, we paid $3 million for, plus another $1.5 million for Sirius, their position in Sirius. And we basically raised $4 million from selling Dolly Varden shares on the back of their financing last February.
So it's purely shares. There's no other
component. I don't have income. Yeah,
right,
there's no income.
What I was getting at. Okay.
What we have is $5 million in the treasury. We have some other assets that we've been able to monetize from royalties. We've actually been making money. We've made several $1 million in trades on some of that stuff, selling off property that we didn't think was valuable. Mm-hmm. And the Dolly Varden originally was $45 million and $5 million in equity and $5 million in cash. We had to use that cash, but the $45 million has grown to almost $60 million, and we've taken $12 million off the top. So we've really exceeded on that side, thanks to Sean. And this is the point. And we support them wherever they go. And that's what you hope to do with your partners.
Thanks. I do think they're a well-run company. And obviously Silver Price has done a bit of heavy lifting in there as well, which is all good news. So I understand the Dolly Varden bit, that's your piggy bank. Right?
Yeah.
The JV you touched upon. In terms of the rest of the portfolio, how do you spend time and assign value?
Sure. So we have two big assets. One is a 300-kilometer greenstone belt up in Nunavut. When I first got here, we drilled a phenomenal hole up there, but the market was soft, and we didn't want to go back without a partner.
Is it a pure gold play?
It's a pure gold play up there. It's got $180 million invested in it over the course of its life. It's up near Agnico's projects, Amaruq and Meadowbank. It's a standalone investment where they have 1.3 million ounces already in a resource.
What's those grades?
It's over 7 grams, so it's really high grade. And up there they want bigger. The bigger companies want to buy and get big.
It's a long way to go.
It's expensive.
Yeah.
The cool part about it is we've got all this equipment. We've got a 100-person camp. We got a place you can land the plane. It's actually pretty plug and play. I went up there this summer. We even brought a producer up. So last year when we came here to Beaver Creek, I was surprised because we hadn't had any interest in there for a number of years. And most of our meetings were about it with producing companies. And it told me, and that was my first signal, that the gold's starting to come, and these guys are prepping. And what the bigger companies want is not small properties. They want big swaths of land. And when we brought this company up there this year, the first question they said was, how does a junior get such a big piece of property? And it's unique. And we get zero value in that in our stock price. And if we were able to bring in a partner, I think we could, really show the industry that there's value there.
There's a whole bunch of different business models that you're employing to deliver to your overall plan.
There's a lot going on, and this is what makes it fun. Yeah. This is why this company's unique, because, like I said, most companies do not have these assets.
It's more like kind of the de-risking component of multi-asset de-risking, good jurisdiction, great. But the different business models will react differently in different market conditions.
Someone else said that earlier, and I never thought of it like that because I'm always thinking about growth and value. And someone said, you guys have de-risked a lot of this. And the prices come down, and you've got these assets that are now buffed out, and you got all these levers. And so one guy said to me, an investor said, what I like about you is that you guys have a lot of money. Which is great because you're not going bankrupt, and that limits your risk there. You got multiple levers for success, so you're not waiting on one item. You could get something that could cascade things, right? And then you're a capital markets guy, and you're sensitive to dilution of the company, which is a big problem for a lot of companies. So our dilution is probably low on the street at 3 to 4%, because we have this resource of Dolly. I'm not actively out there promoting and selling anything, but what it does is it gives you confidence to go to the market when you want to, when the market feels good, not when you have to and take and give out warrants. That's just giving away your future upside. A lot of these guys they're desperate, and that's what a lot of the junior market's been like. And that puts us in a position now to look at a lot of assets, because a lot of people can't raise money. A lot of people don't have the Dolly position. And so we're able to look at a lot of these things and think strategically long-term. And I think this market is ripe for consolidation. I think there's a bunch of good stuff out there we like.
Let's listen to the next question. And let's more, okay, so again, trying to understand how your brain works for me. Juniors of a certain size, 700 million, with too many assets, becomes a liability, in terms of distraction in terms of time, distraction in terms of cash. You don't have the problem with the cash, obviously. What does the next year's portfolio look like for you?
For me, well, I still haven't gotten to our main resource. So, just to be fair, we do have this really great resource that we upgraded this spring. That's right in Quebec. It's I think, and I've challenged my guys to kind of qualify it, and they've gone out and compared it to our peers. It ranks in the top 5 juniors resource in Canada.
Because why do you say that?
Well, it's got the number of ounces. We just added 40% to it, so we got 1.88 million ounces, and it's high grade. It's over 6 grams, and it's we got an open pit, we got underground, but we've proven that it's open everywhere. the east, west, underground. And the best part about it is you can drive right there. You can pull an 18-wheeler up to our property line. There's a spillway where they have the hydroelectric program out of right there. And so the focus has been the last 3 years to develop that and take it from 1.3 to close to 2 million and show it grows as a base for a mid-cap to come in. And then we've been going out on that property and adding discovery. We just had the discovery this week. We have another one that was found in 2018 that we made into a maiden resource. That is very attractive because it's real. It's a real asset. And so overall, we have 3.2 million ounces in the ground. So if you look at our valuation, if you look at the ounces, we're ranked at the bottom of $3 to $4 an ounce in the industry for an asset that's literally you can drive to, which a lot of people forget how important it is. When a producer comes in, they're looking at margins. They're not looking at, oh, we got this really amazing grade, but if it's the middle of the mountains, it's hard to get at. And so from next year's point of view, the focus, though, is going to be on the joint venture that's now called Éléonore South, because we think that there's going to be potential for consolidation out of the sale of Éléonore. It could drag our property in there. And then we've also got this Newmont property that's gaining a lot of traction. So we don't have to spend a lot of money, but we're waiting for our assay results to come back from the summer. And then we're going to develop a plan. And the plan is going to be keep moving those assets forward in each little regard. The focus, though, is going to be on new discovery. And on this Éléonore South property near Newmont is probably our biggest target. It's an anomaly that's got an incredible background of gold when we tested it with biochem, and we're getting it drill ready right now, and we're hoping to be in this fall or over the winter. It's better to go in the winter when it's frozen. And then on our southern property, we'll be drilling for new discovery as well.
Okay, so that's on the existing property. With regards to, because of this cash, that's the thing that intrigues me, and perhaps you may not be getting enough credit for that. So in effect, cash, if you sell the shops, exploration for discovery or acquisition of cash-strapped entities elsewhere. I mean,
everything. So
it's all on the table, right?
Everything's on the table. I'm a capital markets guy. I'm going for where can I create value? I can create value in discovery by spending and raising some flow-through money, typically, or I can do some deals.
You like flow-through?
Flow-throughs, I think it's really great for the company because it's you get a huge premium. And in Quebec, you get a huge premium. And I think a lot of investors in the United States don't understand this. You basically raise money for, say, $1, but you're actually getting $1.60 or 70. So you're spending $1.70 in the ground, not $1. And it's all from this tax benefit in Canada. And so for us, we've been using that, and it dilutes the company less. And it leaves the hard dollars to pay for other things like buying assets. And so for me, what I'm trying to do is, as a reminder, our market cap is less than $80 million. And I got 60, 65, maybe more in actual securities that I can sell. Our enterprise value is so low, and my goal is to open that up. And, we've had a bunch of investors who think that, we ought to do something with the Dolly Varden piece. We've got a bunch of investors who think we ought to really bring forth new discovery. And everything's on the table because I think the market's going to heat up this fall. I think we're going to get a lot of M&A on the back of this conference.
Yeah, but it's a question of how that cascades down through developers and explorers, obviously.
Right.
Mergers of equals or producers buying producers it's not quite, a reallocation of capital is not quite there yet, I don't think. But we shall see how that pans out.
It's not for a lot of them, and I think we're ahead of the game because we've got money. And I've raised a lot of money for this company already, and I did it in probably one of the worst markets ever. I think I could create more value by looking at things, and that's on the table. But at the same time, we scrutinize everything really well. we're very sensitive to diluting the company. And I think that sometimes you got to be patient and wait for the market to come to you a little bit and the deals to come to you.
It's great when you've got money. You can say that.
Yeah.
There's a lot of people here who are not saying
we're
that.
not desperate.
Yeah.
We're not.
Yeah.
We're not. And it gives you a clarity of what you want to do. And like I said, we've got a lot of options where other juniors don't. So to be honest with you, I'm watching what the market's going to do and what other investors, if someone comes in and buys that Éléonore, that could change everything overnight. And if someone doesn't, we have the ability to go up and really develop it. If we happen to hit at this Éléonore South property, game changer overnight. If we happen to bring in a joint venture into Newmont with a bigger producer, that's game changer. That could double the size of the market cap of the company overnight.
So tell me this then: if the market, and I mean, Dolly Vaughn is doing some good work for you at the moment, right? You're being valued at near cash equivalent at the moment, right? So people either aren't understanding the plan for each one of these things, or they maybe discount it slightly because it's stock, not actual cash. But if you were to look at each of your current assets on there and you were asked to put a number on it, I'm assuming it's going to be significantly higher than where we're at today, right?
Yeah.
So what have you got to do to help the audience, because it's your job to communicate this? What do they need to know?
Look, I mean, I think that I've listened to some other guys who've invested in this industry for 40 or 50 years, and they all say that you got to focus on management and you got to focus on doing your homework on the assets. I think traditionally investors don't do a lot of homework and they're distracted by 2,000 names in the juniors.
All saying the same thing.
All saying the same thing. All saying I'm the best, I'm the greatest. And all the seniors do that too. I really think that our challenge is to get people to sit down with a calculator and plug in the numbers, because we've increased, as an example, our Dolly value by $25-30 million, and it has not shown up in the stock. It's squeezed out the value of the rest. Now, way I look at the juniors is it's like you have the nicest house in the neighborhood, but no one's buying and no money's coming in. So you get lumped in with all the other valuations. And if you can't sell, you can sell.
I can excuse that. I think I can excuse that because you've seen stock charts go up like this and back straight down within a sort of 3-4 month period. So I can sort of excuse that. I'm really interested, and I mean in a good way, in terms of the different business models with the different assets that you've got. Right. You're clearly an exploration team working through to whatever phase of development you want to take it through to. And I want to understand from you where the kind of exit moments could be if you play it right, and your ability to go and find more of those, if that's the type of vehicle you are.
So things that I think are really on the table right now is what's going to happen with this Éléonore project. If someone comes in and buys it, and I believe the mine life is around 5 to 7 years.
Okay.
Their goal, whoever buys it, is going to be extend that.
Yeah.
And if they extend it to 7 or 14 or 15 years, that's like doubles the value of the company. Where are they going to get the ounces?
Yeah.
You know, where are they going to get the ounces? And where you find great mines is next to existing mines. And we have this plot right there that's really enticing. So if I was buying that asset for $800 million and I see this company worth $80 million with all this property next to me with all these ounces around the area, be interesting to buy them out.
Yeah.
So what we have is we have it set up in our company where they're separately, organized. It's not, we could sell that asset tomorrow and keep the others and work on the others. We could force them to sell the whole company. I know that there's been interest because of our Dolly position. Someone could come in and buy the company because they would need we have a leading position in Dolly. We're the largest shareholder of Dolly. If someone wants to come buy Dolly, they got to come through us. So again, you got to be patient and let these things come, and you have to look at each project separately. And that's what the big companies do. We have big company problems because we got a lot of things to think about. But, you know, at the end of the day, if I can create $100 million out of one of these projects, you know, that's a good problem to have.
Nice setup.
And I just think that this market, you got to create these great assets and then let people figure it out.
I think what you're doing is putting yourself in a good position to succeed.
So my goal was, I knew this gold price was coming up, and to me, what I've been surprised is the lack of flow into it, and I think it'll eventually be recognized. And in that sense, my job is to put Fury in as good a position to capture as much value on the upside when that happens. For example, keeping the New York listing. I think keeping the New York listing could add significant value to the company, because every retail broker that we sit down with is, oh my God, don't get rid of that. I know it's expensive, but I can't sell U.S. investor retail that not listed on it. So it's a huge value. And I think that's missed. And I think there's a lot of education. And so we are spending a lot more time marketing and going to these companies and doing these interviews. And we're not just doing it with the retail. We're doing it with the producers too. And we've sat down with a lot of meetings with the geologists, and we're explaining. And a lot of them remember that a lot of these assets are traded around for quite some time, and everybody knows them. And wasn't this, and this wasn't that. We actually have done a great job, and we've come out of our meetings this trip like, wow, you guys have really improved the economics of that asset significantly. And eventually, if you tell enough, someone's going to jump. It takes one trade to pop our stock that allows us to do some other things. And there's no way to plan for it. But, you know, as an investor, like you said, you got to get in my brain and think like, God, these guys are thinking. And I'll tell you a quick story. We brought on Brian Christie, who's 10 years at Agnico. He's a 40-year career guy in the industry. I've known him forever. One of my best friends. And he's got the opportunity to work on all these other boards, and he's still consulting with Agnico. And I said, Brian, you spend an awful lot of time with us when you have all these other things and you're supposed to be retiring. What's up? And he goes, Tim, you guys are always thinking. You're always being creative. I don't love all your ideas, but you work through them. You have a great process. And he's like, it's just exciting because you can see the potential. And he's like, I can see the pathway. And he goes, I'm having fun doing it. And that's a huge thing to come from your chairman. And that's where I think everybody involved sees the potential. When I took on the company role, it was a very difficult situation with no money. I didn't get paid for 4 months, and neither did the CFO. We had to go out and raise the money just to pay our salaries. And I left the industry. I need the money. But I was confident because I had been doing this so long. It didn't seem risky. Like a lot of people say, oh my God, you're running a junior mining company. How risky is that? I don't think it's risky because I can see the pathway. And one of the biggest challenges has been just keeping and raising money so you can do these things that are cool. A lot of people can't, they're super great at what they do. They can't do it from a capital markets position, and I think it X's them out. I don't think you should invest with them. That's how I think.
Good man. Really appreciate you going through that.
Yeah, that was great.
Really interesting.
No, great questions too. And I think it's important to focus on culture because that's the defining thing, and it starts at the board, you know?
Yeah.